entry for the second week of February 2026. And it was a week when this so-called rotation trade continued. Probably the biggest announcement last week was cooling inflation in the US, but that didn't help the stock market because the other key theme was a bit of a tech wreck, really, but centered on software as service companies. Ostensibly, the reason behind that is a new piece of software or infrastructure, if you like, called Cloud Cowork, which came out, and people have started very quickly to do a lot of things with it. Probably the best way of explaining this is, for instance, in the legal profession, there's a plugin there which lets lawyers do a lot of legwork, which before some software service providers were providing, and as basically a skin over large language models, or that's the way it seems now. Now, is this a bit of an overreaction? That's what we're going to discuss a little bit, along with emerging markets in our What We're Working On segment this week. But what you've seen in markets is, as you can see here, the Nasdaq down by about 2.5% since we spoke perhaps last Monday or Tuesday. The Nikkei, on the other hand, up 4%. Emerging markets also up a few percent, and small caps outside of the US also up by a few percent, but the Russell 2000 down by a few percent, along with the Nasdaq. Now, there was probably some other generalized worrying going on, especially around what's going on in Iran. So the oil price was very volatile. Bitcoin is down 28%. It continued to fall last week and down 28% so far this year. And the Aussie dollar, actually, a little bit of a surprise, still touched almost 72 cents and, hovering around 70 cents overall. The good news for markets was US inflation cooling, but alongside some reasonably positive job numbers, for instance, in the US, and signs that the US economy does still look quite strong. Very different from the picture in Australia. The key data point last week was the US CPI, which was month on month about 0.2% up compared to an expected 0.3%, and the core was up about 0.3%, which meant 2.4% year on year, which is getting pretty close to the target for the US. On the other hand, in Australia, was probably one of the key things that people watched was the comments from Deputy Governor Andrew Hauser, who basically sort of reiterated what had been talked about in more general terms at the press release the week before, that the RBA has been surprised by the strength of the global economy, the amount of credit creation in Australia. There's a lot of liquidity sloshing around here, and prime centre is housing loan growth, which grew at 10% year on year, its highest since 2000. So there's demand for housing, but there's also signs of tension as well. And there's slightly sort of stagflationary feel with consumer confidence not brilliant. So we're spending most on houses, actually. Capacity utilisation still very high, but falling a little bit. And the Aussie 10-year yield started to sort of drift down a little bit, but more driven by what's happening in the US. And that strong currency also could create a little bit of inflation, but not the kind of inflation that we want, just things costing a little bit more. So there is this uneasy balance between an economy that sort of feels a little bit sluggish, lack of productivity, but lots of demand, especially for housing. And overall, the sense in the market that there is probably a basis for another rate hike, but after that, people really not sure. But as I said, the overall theme in markets was rotation, and Asia doing very well. Some markets up by 10%, like Thailand, Japan up 8% month to date. That's just a couple of weeks. And the Nasdaq at the other end of the spectrum down by 3%. But the thing that's really sort of caught people's eyes, the equal weighted S&P 500 as a proxy for sort of the rest of corporate America was actually up. So you are seeing a bit of a rotation. By numbers, most stocks were up, but it was the biggest ones that were down. And you can see here a list of software stocks, but also big tech stocks like Amazon, Microsoft down 7% month to date, Amazon down some 17%, and then a lot of those more software stocks like Salesforce down around 10%. So we were at the H&B conference last week and don't have a pre-prepared interview. So this What We're Working On video this week really is going to be what we're working on. And we're going to follow on some comments that we made about emerging markets and how much resilience, how much gas is there in this rotation trade? Look through the lens of emerging markets. How do polarized markets affect how we analyze that? And some interesting things that we've come across there. And also leading into this sort of so-called software as service tech rec. What's the basis for it? And just talk about some of the work that we're going to be doing over the next week or so. So quite a few interesting things to delve in within equity markets, and we'll be covering that in our What We're Working On video this week, if you want to tune into that as well. Otherwise, look forward to talking next week. Thank you.